All right, when we get started with the S&P 500, what's happening with the stock market this week, and I have a few big plays in my opinion that are going to be absolute juicers when we look at what's happening overall, because we have crypto making some big moves here going into Sunday's market open, and then also too with futures. And then we also have what's happening with Powell, what he said on Friday, and how I think it implicates what's happening with the market and further downside in the short term. I'll explain exactly why, my viewpoints. If you have questions, comment down below. I'm sorry in advance there's bots on the channel, by the way. I'm trying to get rid of them. YouTube doesn't care. So let's get to work. Now, first thing, obviously SPY had a pretty decent bounce here to end the day on Friday if you did not watch that video. So we saw a little bit of a bounce, but I want to be very clear on what you're looking for overall, right? You're still above the 200 SMA on SPY, but when we look at futures like ES futures, the S&P 500, the NASDAQ, and Dow, there's a lot of concern. ES, which is the S&P, and the NASDAQ are below their 200-day moving averages, and then the Dow is sitting right on top. But I believe this could push for further downside. The other thing that I'm looking at here specifically is what's happening overall with volume and what's been some of your leading indicators. Now, if I look at SPY, I think there's potential that this could be an area for a bounce, right? But you have no logical reason to assume that based on the lower highs that are being developed and really just sitting in a downtrend overall. The other big visual here is when you go look at what's happening with volume. And I'll show you on the chart, but also looking at the numbers, I think provides more clarity for individuals. You look at what's happening here on volume, you can see 80 million, 80 million, 7,109, 74, 88. I mean, very, very high increased volume on this downside. Now, prior to the downside, when we were pushing to all-time highs, volume was stagnant to the upside. Now, I want to make something really clear. You don't need to see high volume to get continuation in a direction. You don't need to see that, okay? But when you're getting a reversal or you're getting a breakout, you tend to see higher volume, okay? So what's interesting here is that you've seen nonstop increased volume over specifically the past 2 weeks, which has led to the most downside on the S&P and SPY specifically to that downside. You've seen buyers try to get you back up, but ultimately they're met more aggressively by sellers. You've also seen Trump be nonstop mentioning tariffs. Now, I don't want to go too much into Trump's tariffs today because we've gone over it so much, but again, we know reciprocal tariffs start April 2nd, and we know that he's really not going to let up. We also saw what China did to Canada. Now, I don't want to say that America and China are working together here, but it seems like China's like, you know what, America, we're going to just give you the alley-oop to absolutely decimate Canada's market. Now, again, you can disagree whatever you want. I think Canada is in a very bad situation personally, and I think they're probably going to bend pretty soon because what's happening to them is pretty tough. It is pretty tough. And so the S&P right now looks pretty bad. Now, going into NASDAQ, you look here as well. Again, I want to mention the futures paint a very clear picture. You're still holding below your 200 daily moving average, your 100-day moving average. You see you held below, shot down, held below, shot down. Now, you found some good buyers from that, 19808 region. Now, before I go too far into the video as well, I do want to say right now, if you're paying attention, if you're trading, if you're looking at all this information and you want to get more information, more trading, you want to see what we're doing every single day, the Discord might be for you. Now, again, I've gone into specifically all of our levels here as well. If you go into what happened on Friday, I told you before market open, like I always do, what are my levels? What am I looking to trade? Everything in between. And again, on Friday, it was very clear what we were looking for. 809, 20 minutes before market open. We were looking for downside to 1995, then 1908, then 19500. And you can see as market open, you shot down right to our levels and you bounced. So it wasn't really a big surprise for us what we were looking for, but again, gave us more clarity. And if you want to see what we're doing, what we're trading, and you want to get access to all of our indicators, the Discord link is down below. So make sure you tap in and check it out if you want. Now, going back into NASDAQ and what's happening here, I'm going more to the daily and I'm looking here, and I'm looking more for more clarity near March lows, which is 19.5, that level that I mentioned. Again, you had a pretty decent daily candle established on Friday. But again, you've heard the rule, markets don't bottom on Fridays. I tend to agree, but I would also say they're not really seeing a change or a pivot in the market. And what you're seeing this bounce from is from what Jerome Powell said specifically, which I don't think was bullish. I don't think was good. I don't think was great. You see this narrative that the market's in a great position. Now, in my opinion, what Trump is trying to do, and again, and I retweeted this on Twitter last night for you guys as well, because it was a really good breakdown and a really good visual of what's happening. So you can go in and see. This is a theory. Tom Lee commented on this. I think the White House wants the Fed to get off of neutral. I think that it's increasingly looking like the Fed is behind, meaning that they want the Fed to get to the point to where they want to start cutting rates once again, to start stimulating the economy, but they don't want to because they don't want to speak too fast on inflation, things happening along those lines. The White House wants to lower bond yields to refinance debt at a cheaper rate. And based on Trump's comments on the stock market this week, I don't even look at it. It seems like the volatility in markets is being imposed to get the Fed to cut rates, which I tend to agree with, because when you look at what's happening with yields, specifically the 10-year yields are going down. Now, when Powell started talking on Friday, you saw yields go back up because Powell was very clear that they are not at the point to where they want to cut rates. There's no reason for them to. The market's in a decent spot. And he kept saying the market looks good. We have to be patient. There's no reason to cut. There's been no signal from the Fed that any of them want to start cutting just yet. And so this moved me to the other viewpoint that Trump is going to continue doing what he's doing. Tariffs, weakening the market, and trying to force the Fed's hand. Because if Trump does nothing, the other side of this is we go through potentially the whole year of 2025, maybe into quarter number 4, before we get another cut. And that's something that you have to be thinking about. And if that happens, our market's just going to be stagnant. It's not going to get a lot of movement. You might see downside. He's trying to rip the Band-Aid off right now, blame Biden, blame that administration. And then hopefully the next, half year into the last, 4 years of his term, he looks good and it's presented in a better sense that Trump saved the market, Biden killed it, lowered our market, got us back up. That's a theory. That's a viewpoint. I think on Twitter it was just a really good visual, and I actually like this visual. It makes a lot of sense. Kind of what we talked about here as well. So a good visual, good things to be thinking about, and kind of just a way to be looking at the market. And again, when you look at what Powell's saying, it makes sense because Powell said that the thing that they're unsure about is the effects that tariffs will have on the market and that it could make them start to get more aggressive with cuts. They don't want to be, but they might force their hand. We also saw on Friday, unemployment rates went up from 4% to 4.1% once again, which again, Powell said the employment still looks fine. You're going to want to see that about 4.5%, 4.6% before, again, the Fed gets very concerned, or unless it starts jumping from 4.1% to like 4.3%. So we start seeing it rise rapidly. That could be another sign of caution. So again, things that you're looking at broad in the market there and what you have to be looking for. So again, as we go into this week, for me personally, I still am looking for that downside. The only thing that's keeping me cautious is that SPY is above its 200 daily moving average. You get below that, and I think it's Band-Aids off. I think you're starting to rip back down. And again, this is a massive level where you're at. Like, don't get me wrong, this is your previous high from July here on SPY. So you're bouncing where we talked about. We talked about the previous videos. So not a shocker, if you will. But again, below this, I think you start coming back down to 550. And again, NASDAQ, we have our levels and everything marked out there. Again, you look at the higher time frames, the projection here at all-time highs. It was not a lot of good stuff happening, in my personal opinion, where we're at. Now, again, you go a step deeper. You look at semiconductors. What's happening there? This is one of the more concerning parts here. You have the 100 MA crossing back down below the 200 SMA on semiconductors. The last time this happened was 2022. When they crossed, things didn't go well. Semiconductors took a massive hit. Go look at what happened to NVIDIA specifically. When that happened back here, NVIDIA went from basically 24, which was at $240, down to around 110 or $11 here, right before the split. So you can see lost 50% of its value. Now, am I saying NVIDIA is going to go down to $60 and lose 50% of its value? No. If that happens, praise the Lord, we have one of the biggest opportunities on our hands. Will we get it? Time will tell. But again, what you're looking at right now, you look at some of the other semiconductors and like AMD getting the Band-Aid ripped off looks absolutely terrible. You look at Intel, again, trash. Been telling you this name is absolute dog water, trash. Don't like it, don't care. The big buys on the dip, in my opinion, TSM, NVIDIA, bada bing, bada boom. That's what I'd be looking at for myself personally. Now, the biggest opportunities on this week, in my opinion, is crypto. I think crypto, again, we talked about it, a few weeks ago. I think it's that time again. Bitcoin looks like trash. Bitcoin looks like hot garbage. I look at Bitcoin and I think to myself, Lord, are you giving me another shot? Because this is beautiful. So you're seeing Bitcoin come back in. And again, let me bring on my drawing so you can see. You're seeing the lower highs being developed here. If you've seen us on Twitter, I just posted this as well. This is terrible. Basically, your highs back from January 20th, you put in nothing but lower highs and lower lows. You shot up recently on this hope that the crypto summit and Trump announcing the crypto reserve, what he's looking to add would be bullish. Well, spoiler alert, Trump basically said, we're not buying shit. We just have a bunch of crypto already, and that's going to be our reserve. Now, maybe he starts buying in the future. Who knows? But in the short term, again, Bitcoin looks like trash. You're getting back below your 200 SMA. The target's 74, 73.5, give or take. If you get below that, you're really back in your range before the breakout from the Trump, being elected, which could bring us all the way back down to 55. I don't think that's likely. I'm being more conservative. Target is around 75, 73.5. So again, around 2,000 point range that I'm looking for Bitcoin to come down to, which leads me back into my top stock here on the week, which is MSTR, MicroStrategy. Now again, MicroStrategy, let's be very clear what you're looking at here. You want to get below your massive level of 281. Remember the first time we shorted it, we went short below the 100 MA, we targeted 281, and then under that you targeted the 200 SMA. Well, MicroStrategy, in my opinion, is probably the highest. It's the most at-risk stock in the market. I don't think there's a stock that's more at risk than MicroStrategy. I really and genuinely do not believe that. This thing is hot garbage. Go look at Michael. I posted on Twitter as well. Go look at Michael Saylor at the crypto summit. Dude was tweaking. Again, no shade towards people with mental illness or something, but dude, that guy was tweaking. Holy crap. I don't know what was going on. That was wild. But he should be because below 280, again, we know you'll come back down to the 200 SMA. I mean, you literally dropped there in 3 days before. You dropped down from 280 down to 235 in a matter of 3 to 4 days, which was crazy. Now, you get below that, my target is $200 to 180, which at that point, you're like, holy shit, how big of a dump could this take? And again, MicroStrategy was a printer last time. So below 281, 280, I think it's a hammer of a short as long as you're getting weakness in the market, but you're already seeing the weakness on Bitcoin. The other real question is if Bitcoin drops down to 70K, how hard does MicroStrategy get hit? In retrospect, at highs, MicroStrategy was at $500, give or take, around that area. Bitcoin at all-time highs, 110. Bitcoin's only back down to 82K right now. I'm just saying, think about what's going to happen to MicroStrategy. Where is the point where MicroStrategy is okay, this shit is bad. We're just buying all of our Bitcoin, and you have someone like Michael Saylor who just bought more Bitcoin, which I posted on Twitter. He bought $2 billion worth of Bitcoin at an average entry of $98,000. Who is letting this guy buy? He's literally falling for the number one retail trick in the book, buy high. He's just buying high. I get averaging in makes sense, but dude, average in a little bit later. What are we talking about? Save some for the dip. Why is he not buying at 70, 80K? Why is there nothing in the arsenal to buy right there? Maybe I'm missing something, but so far that's what I see in the market right now. Now, the other area that I mentioned is semiconductors becoming a big concern. Because again, if semiconductors roll over, then what do we know about NASDAQ? It's going to get hit just as hard. So again, when you look at semiconductors as a whole, I made the video on NVIDIA yesterday. I think buying makes a lot of sense. If you're buying stock, you need to be averaging in. That's the only logical way to be averaging or buying stock or for the long term is, again, whether it's weekly, whether it's monthly, whether it's bi-weekly, it's a specific date. You have a specific amount of money that you're throwing in the market, averaging in to whatever equities you want to buy. That's long-term investing. You're not going into it with, well, am I buying and could this be the bottom right now? That's a stupid way to think about the market as a whole. And you shouldn't, if you're thinking about it that way, you're probably going to end up selling when you dip and you're not going to catch the move back up. So it has to be a long-term mentality. So I think buying NVIDIA on dips makes logical sense. It's one of the few names that I have at the list of this makes sense to buy. Again, and if you think about it right now, which is crazy, NVIDIA is, if you look at the PE ratio and the forward PE ratio, NVIDIA is more affordable to own right now than it was to own almost a year and a half ago. It's literally more affordable. The revenue is tripling. It's crazy. When you look at the free cash flow that they're bringing in, the only company that's on par with them is Apple. I think NVIDIA brought in around 65 billion to 70 billion free cash flow. Apple brought in 108. I'm just saying, NVIDIA is growing rapidly. I think they're not going anywhere. Be watching them. I like TSM a lot, but again, I've said that. What I'm looking at there specifically, you're already seeing other names start to roll over. Another big name on the week here is going to be Amazon, which I don't think is getting enough talk. It's not getting enough conversations about it. I liked it a lot. I didn't end up going short on them at the end of the week. I really wanted to, but you got back up with the 200 daily moving average. What you need to be looking at here is all the gaps. I've marked them all out here. You can see it's also on Twitter. Maybe it's in Discord. I don't know where I posted it, but it's for sure in Discord. But you have massive gaps. Gap you filled currently at 197. Your next gap is all the way down to 187, 189. This is terrible. This is a terrible chart. If you hold below the 200 daily moving average on Amazon, this thing is getting whacked. I mean, I called it out in Discord. Again, we did not get the fill though. I want to be really clear. So if we didn't get the entire move, but I left it up. Obviously, I'm never going to tell people hey, you need to sell here. You need to do what you got. Do whatever you want to do. But I said here on Discord, you can see where I commented here on Friday at 197. I said this shit looks terrible. We're looking for 195.4. Lose that, we're looking for 189 to 190. I mean, obviously, Amazon from there went all the way down to 192. So you didn't get the exact move. You had trailing stops. You still made good money. But again, those contracts, go look at the contracts. They went berserk. Even the March 21st monthly contracts still went crazy. So you don't even have to trade weeklies to make 180% on these types of contracts as well, which I'm never saying to push for 100% per trade, things like that. It's a bad mentality to have, but it just goes to show that these contracts are moving so good. Now, another big name we've talked about, and it's interesting, is again, like I said, you're going to start seeing this roll over into every sector if the market's really pulling back. Now, again, if you get back above the 200 SMA, it's very simple. If the Nasdaq gets back above the 200 daily moving average, I step back. I say, look, you got to be careful on shorts. It's hard to be bearish if you're above the 200 daily. Okay. I will concede. I will take a step back and I will say, look, you got to reevaluate what we're looking at. You could maybe be getting trapped. It is what it is. But until then, you have to be looking at what's happening across the board. A name like Netflix, which was holding up fantastic. And I mentioned it last week here on the channel as well. Again, you got below 940 and guess what happened? You literally dropped down to 850. You dropped almost $80, $90 in a matter of a day. One session, just wiped all the way back to the downside. Again, filling the gap and back at the 100 MA. And dude, worth considering, not a lot of liquidity back down to the 200 SMA either. I mean, I'd be looking more towards 830, possibly 840 for some support. But again, you're seeing these names that were very strong quickly come, back towards reality here. Even names like Meta, which again has been one of the strongest names over the past few months, again, just wiping out a lot of these gains. Back below 638, again, very weak, getting back down below the 100 MA. You can start looking for the 200 SMA near 570, which again, you have some supports until then. Again, I'd probably be looking closer towards 605, which is the area you came into here, which is a monster level, but it's still worth mentioning. You're seeing sellers get aggressive on these names. Meta, in the past, 2 weeks, 3 weeks, you're down from 740 down to, you hit lows of 600 basically. So $140 on Meta alone. And it goes to show the selling that's taking place. The icing on the cake is realizing where the Nasdaq is and what's actually happening there as a whole. You look at the Nasdaq and you can see the Nasdaq isn't that far from its all-time highs. That's the kicker. Like when I look at the Nasdaq, I'm like, dude, like you're below your 200 SMA. It's bad. It is what it is. But it's important to realize. I mean, dude, like just 2021 all-time highs is down at 18.7, which at this rate, you could be there in no time at all. But it's still worth mentioning. You still have quite a bit of room to go. You look at the past run of the 2 years that we had from December 2022 to right now. I mean, you ran from 12.5 on the Nasdaq all the way up to 22. You had literally the Nasdaq went up 100%. In the past, basically around 85%. But in the past 2 years, the Nasdaq has almost doubled. One of your best runs of all time. So for people saying that pullback's not happening, whatever, I will say, I don't see in the next 2 years of how there's going to be another scenario to where you get a market pullback. I also don't see this lasting for a year. I don't even see this lasting for 6 months, to be totally honest. Again, I think once the Fed pivots, it'll probably mark when the bottom is in. My personal opinion. Maybe like a month after that, maybe a few weeks after that, but that's going to be the critical point is to when you start seeing pain directly inflicted in the market and the Fed start to pivot, because at that point too, in my opinion, Trump will start to pivot as well and really start to get that curve back up on the market and what you're really looking for there as well. So again, on this week, biggest trades, biggest stocks I'm looking at, right? Few things. And one thing I did not mention here is Dow. Dow is at a major. I mean, this is huge. Dow is at a critical point. You're holding your previous highs here from July, which is the going theme, which is basically 42.5 and right there near the 200 daily moving average. If the Dow holds below 42.5 and we see sellers actually step in, I don't see a world in which the Dow doesn't drop to 42K and most likely 41.6. You've sat here basically for a week. That's the most important thing to understand is that you've basically sat here since Tuesday, right? You just sat at support. Sellers will step back in. Just like you held here for a week and then you drop down. Very similar chart. So it's important to understand where you're at and why you're moving. Now, again, I don't think this is a short until you get below 42.5, 42.4, and then you have clear downside, no liquidity, things along those lines. Again, the next name, MicroStrategy, crypto. I'm not a fan of Coinbase here. I mean, Coinbase still looks like trash. You're below your 200 SMA. You're looking for 187. But I think MicroStrategy is just a bigger, better play. Risky play, very large reward opportunity. Be watching that. Tesla, also very interesting, filling some gaps. Your next gap down to 215, 213, crazy. They just announced the new Tesla Model Y or whatever. We'll see how that reaction that has. We'll see though. But Tesla's just down so much, so I'm just like kind of weary of like trading this further downside or anticipating the downside, not necessarily trading. If you get the weakness intraday, then of course you take it. But just anticipating that is tough, in my opinion, with all the downside that you've already seen. So again, what I'm looking at, how I'm marking this out, how I'm watching this. I'd also be watching Microsoft if it breaks below around 385. Again, massive level here as well. And again, you're seeing this across the board. Massive supports on a lot of major stocks. What happens when these levels break? And they're all there right now. So it's just saying, hit the brakes for a second. Let's see the reaction that we get. But things could start really falling into place and for some really big setups as well. If you have questions, comment down below. Let me know. Again, I'm trying to get rid of the bots on YouTube. I'm trying to take care of it. It's just YouTube doesn't care. They just don't care at all. If you have questions too, ask on Twitter. Discord link down below. Have a good one, traders.